Good evening and welcome to 2022. Yep, we are now on Monday and this is the 3rd of January, 2022. I got to get used to saying that. And welcome to your metal market update. Interesting day today because everything started out a bit stronger in the metals and then crashed. Literally came down really hard and then bounced away from those lows. Let me tell you my thoughts at the first few days of trading in futures markets, especially at the beginning of every year. You get the funds, and I'm talking the managed funds, the big funds that are out there in the stock market that look at different markets, and you get money placement. And you've got to learn to play with that because new money comes into the market, and it can do it in dribbles and drabbles. And then because of the window dressing at the end of the year, there's some of that unwinding. They've already got on paper, in theory, what they held or what they're going to hold, but then they change it, and they have the right to do that in the new year, and then they play the game. How do I know? I owned a stock firm. I definitely know it. Commodity firms. Well, I've been in this my whole life and owned commodity firms since the 80s, so I think I know what I'm saying when I say that, and that's what you get. Now, the A-League players will start coming into the markets very gradually as this week moves on, and then it'll be a non-event, actually, by the end of the week as money's placed and people start looking at what is going on. Today was the beat-up day on interest rates. You saw interest rates absolutely go to 162 almost in the 10-year note. Well, that drove the dollar sharply higher. Dollar did sell off its highs, but still 10 points away from it. You dropped the heck out of the euro currency, went down into the 113 area. But this is, to me, not a surprise, nor do I know that it sets up trends. It is common. It is people trying at the beginning of the year, oh, I'm going to place myself. This is what's going to happen. You don't know what's going to happen. So when we take a look at gold, the first thing I'm looking at, it is still over the 1793.60 level. Therefore, the overall bias, in my opinion, is that the trend is up. Up until you close back under it, then the bias is down. When we take a look at this chart, you can see how you came up, and I just want to give you an idea of this range. You opened up today at near the highs of the day, and you went up to 18, I'm just looking here, you opened at 1830, got as high as 1833, and then the bottom fell out of the market to 1798.20. And it was just an ascent straight down. Did you do any damage to the chart with that? Well, if we'd start taking a look first, and let's move over here to the swing lines, no. In order to hurt the swing line, you have to take out 1789.10. So the pattern is still one of higher lows and higher highs. What else? The key moving averages are right here. From 1802.10, the 200-day average, to the 18 at 1797.80, and then the 100. Another thing that occurred, do you remember last week when we were talking, and this was Thursday, and I was saying you got a bullish crossover. When you get a bullish crossover, often, not all the time, but often, the traders that watch moving averages come in. They kicked up the market on Friday, as you can see. They went up to an even higher high today and came right back down. I happen to think the pros are going to buy this market right here. I think they'll neutralize themselves if you get under 1789.10 and take another look-see, because that'll break the pattern of higher highs, higher lows. When I look at Bollinger Bands, gee, am I surprised? Not even. I wish I could tell you on a scale of 1 to 10, oh my God, that's a 1, it surprised me. What if I told you a 10, I fully expected it because it's exactly what I teach in my enhanced Bollinger Band course. The first challenge of Bollinger Bands often fails. The smart money starts coming out of the market. You can see what happened over the past 2 days, and here you're right back down. You'll say, well, it doesn't mean anything. Okay. It's a $29 difference from where you're at now to where you were there. And the right thing to do, because you would come back to the 18-day average, is put that in play. How I teach in my charting course, and I'm talking my regular charting course, every time you hit the 18-day average of closes, the red line, it's like a reset on a pinball machine. What was resistance and you went through and knocked it out of the way comes back. It's like your kid got on that lawnmower. He's 10 years old, 11. He's driving it. He forgets where the clutch is, and he knocks down the fence. Okay, he didn't get hurt. But there's no resistance there until you call the repairman up to put the fence back, right? Same thing here. Once you get up and you take these out and you've run them and you pull back, well, they're going to be at another level to create new resistance. Plus, you hit the reset button. You got that repairman the moment you hit it, and there's your resistance. It's another way to look at it. The other part of the market is, what were you doing here? Well, did we ever embed? So we look here. Both numbers were not over 80. First time they're over 80. Second time they're over 80. Not over 80. And as you can see, right now, still not. They just got overbought. They never embedded. They never locked in that momentum. Okay, so do I think the pros will be aggressive? No. Why? Anytime you have a reading over a 70, it's a sign that you're still overbought. Either part of the slow stochastic, the K line, which is red, or the D line. When you come over now to the gold-silver ratio, you can see how this is still backing off just a little bit. The lower this number goes and stays like this, what happens? The stronger silver is relative to the gold market. If we look at silver, silver's number one, overbought as can be. I don't think it'll attract new buying with the 70-plus reading in the slow stochastics. What else? Each time you've gotten up here recently to the Bollinger Band and the 100-day average, come on. The pros are taking money off the table. Come up again to it. You think they're not going to do the same thing? Why not? And they did it again today, and you can see how the market's correcting. So neither gold nor silver are in, for the average trader out there, a buy mode as I'm seeing it. Pros might nibble and try to be heroes. I don't know. In the copper market, we now have lower highs, lower lows. The swing line is down. However, you're over the 18-day average. Therefore, the bias is up. What are the slow stochastics doing? Well, you can't count tonight's numbers both being over 80 because you don't know where tomorrow will finish. But both were over 80 on Monday. Both were over 80 on Friday. Not that way on Thursday. Tomorrow, if we end up like this, with both numbers over 80, I say the market turns into an all-out buy looking for the upper Bollinger Band. But you got to get through tomorrow, Tuesday, in order to know where you're at. The platinum was overbought, hit up here, its upper Bollinger Band. It's the first time. This is where the pros were coming out. They weren't getting bullish with the general public. They were liquidating, and now there's nothing. You have lower highs, lower low, but you're over the 18-day average. You're neutral in that chart. In the palladium market, a higher high and a lower low. You had an embedded reading. Let me show you this. Okay. Day 1, 2. That's Wednesday, Thursday. Okay. When you get that, it tells me that on the breaks, the pros will buy. They'll stop buying. Well, if you took my enhanced Bollinger Band course, and I'm not going to tell you the rules, they're so simple, your kid could figure it out once I give them to you. They'll wait. This was not a buy mode on Friday, okay? And away you come here. You lost the embedded reading. Okay. Friday, actually, they might have bought. I want to take that back. Not if you understood my other rule. You don't go into long holiday weekends with positions. This is futures, folks. This is not the stock market. You can give up your position and come back in. You have 90% leverage. It's not 50% leverage in the stock market. The volatility is going to be greater. Learn to use the volatility to your edge. Edge, that's a big word this year. Not working against you, and so few people understand that. In the dollar index, what do you do the first time you hit a Bollinger Band? Out, out, out. I don't care what anybody tells you. You'll tell me the sky's falling in, and I'll go, I don't care. It doesn't matter. It's a chart, and it says you don't go short at Bollinger Bands, and now you've come back. You're not trending. You got a higher high and a lower low. You got oversold. There's nothing going on there of any significance at all. So if you like how I talk to you and what I do here, you're probably going to like my complete futures package. This package, I write 2 comments a day. I write 1 on Sunday night, and then 2 starting Monday, Tuesday, Wednesday, and Thursday minimum of one on Friday. During the day, if I see something I want to do special, I'll put out what's called a special update. In addition, you get my special reports that I put out, and I do reports via videos. I don't believe that you do these special reports anymore in writing. That's yesterday. If you see a video clip, I can make this so easy. I can make a 3-minute one that teaches you what's going on. In my objectives in the videos, you're going to see price objectives, the reason they're there, where the stop orders have to be, how to come out with the slow stochastic, how to come out with a regular stop, why you should work on that, which way to work an order. It works, these videos and what I write, on every device you have, and we have a brand new phone apps that work on your Android and your Apple. They even give you the stock quotes now. So it's everything rolled into one. We want to give you a free trial. Just go to our website, go to free offers on the top left, click it, and away you go. I'm Ira Epstein. I'll see you all tomorrow.